This 33 level in silver is like that 2000 level in gold. This is where the battle is being fought for control of the silver market. When they fail to hold the suppression at 33, then I think we'll start the um, short squeeze in silver.
You said silver is too cheap. What if I flip it around and say gold is too expensive? What do you say? Hello and welcome to Soar Financially. Thank you so much for joining us here for yet another interesting discussion. We have first-time guest Gary Savage joining us. He's the president over at Smart Money Tracker, and really looking forward to catching up with him about gold and silver. We're going to do a bit of chart analysis, and I'll be quizzing Gary about what's hot, what's not, what precious metal should we be looking at, and of course, is gold overbought? Is it overhyped? And maybe is there an opportunity left for us to invest in? Of course, different angles to the gold topic, like is the investment approach, the stacking approach. We'll just talk about the price action today and see how much room there is left in it. Of course, we're going to frame it a little bit with the macro, but it's going to be mostly gold and silver today. Really looking forward to that discussion. And before I switch over to my guest, our regulars know the spiel. Please hit that like and subscribe button. It's a free way to support our channel, and we tremendously appreciate it. Now, Gary, it is a great pleasure to welcome you on the program. It's good to see you. Thank you so much for joining us.
Well, thanks for having me on.
Absolutely. Yeah, Gary, we need to talk about, gold in particular, but maybe a nice opening question before we get started on the gold topic. Like, how relevant is the economy to gold right now, and how much is gold reacting to the economic situation globally?
Yeah, I see a lot of people expecting a recession. I'm sure we'll have one at some point, but I don't really see any signs of a recession yet. And they want to equate a recession with a crash in the stock market. I don't really see that happening either. There has to be a catalyst for a recession. There's got to be something that causes the middle class and the lower class to clamp down on spending. Most of the time, 90% of the time, that's a spike in the price of oil, like 100% or more in a year or less. Such a big shock to the middle class and the lower class that they, all they can do is afford to put, gas in their car and buy food. They can't go to Starbucks and they can't go out to eat. So it kind of starts the spiral down into a recession. We don't have that right now, so unless we have another pandemic where we, self-destruct, I don't see an immediate recession anytime in the next few months anyway. So I don't see a market crash.
No, it's difficult. Like, based just on the economic indicators that we're looking at and the data we're being fed, the official data, it looks healthy. Like, I'm going to get some hate in the comments for saying that, but it looks like the economy is healthy based on those numbers. So tough to predict a crash if that looks right. Then again, like, we're recording this on Wednesday, February 26th, and Nvidia is about to report aftermarket. If those numbers disappoint, we might be in a different world of hurt here. Very, very different. But of course, we want to talk precious metals and the influences of the gold price here. Back in the summer of 2024, you announced a bit of a game plan, a bull market game plan for gold and silver, Gary. How has that worked out? And share some details with us.
So October of 22, that was the 8-year cycle low for gold. And gold is a cyclical driver for the entire precious metal sector. So if gold's going up, silver will eventually follow. We're still early in that 8-year cycle. I don't know that I've ever seen an 8-year cycle top quicker than 4 years, and we're only just maybe 4 or 5 months into the second year. So even worst case scenario, we're probably going to go into 26 before we were to get a top. And I tend to think that we'll probably get the kind of the parabolic bubble type phase that will end this secular bull market. I think we're going to get it during this 8-year cycle. So my expectation is that gold's probably going to rally into late 26, more likely into 27, maybe into 28, and then that's where we'll get that top. And I'm on record. 7,000 is going to be a piece of cake in gold. That's only just a little more than a double from here. I think 10,000 is probably more realistic, and $100 silver is going to be a piece of cake. 250 is not out of the question, and even 500 is not out of the question when we get into those last couple, 2-3 months of the parabolic move that tends to be how a market tops.
Yeah. No, it's very interesting. Like we just started, but then again, I look at the chart, and we'll probably look at the your charts here in a second as well, Gary. But it looks topsy. Like you use the word bubble, bubble phase. Personally, like maybe because I come from the junior mining end, and like whenever anything looks positive, we get whacked on the head like a whack-a-mole, and the rug gets pulled from underneath us. So I'm always cautious and nervous, and maybe I'm German, I'm always negative as well. So when I see 2950 or so on the gold chart, and pretty much a chart that goes straight up in a 90-degree angle, I get very nervous. So maybe
and there's a reason for that, and I'll tell you here in a minute.
I was going to say, like, maybe we can share that your chart, and you can maybe either calm me down or make me even more nervous that we might be into a correction phase. Nothing wrong with a correction, by the way. Correction is not a crash. It's not a trend revision or reversion. So I'm really curious, like, Gary, like, am I right to be nervous right now?
So not yet. I'll put it that way. So we are going to have a correction. I don't think it's going to start until maybe late March or April, and it probably will be severe. It's not going to be the top of the bull market, but it'll be just, a really scary correction. We haven't had a really scary correction in a while. Most of the corrections since we kind of left 2000 behind have been more sideways churning than real corrections. And the reason for that is, I'm pretty sure we broke that cartel manipulation in the gold market. We haven't broke it in silver and in the mining stocks yet, but it did break in gold, and it broke when they failed to drive gold back below 2,000. That was the point at which the cartel lost control of gold, and then what resulted was an 800-point short squeeze rally, and that's why you see that big parabolic move. That's the banks being forced to cover into a short squeeze.
You mentioned cartel manipulation. Like, I have to ask you, Gary, like, can you be a bit more specific? What do you mean by that?
I think it's just the bullion banks that, they're the ones that are always short. They're always short the metal, either to a huge degree or to a lesser degree. Okay. And the mining, the miners also will hedge their forward production to some extent. But you get these late night attacks when there's no volume, and that's not natural. That's somebody trying to suppress price and trigger a selling event at the open. But I think, it still happens from time to time, but it just doesn't have much effect anymore in the gold market. Like I said, it's still going on and still effective in the silver market and in the miners. I think silver's about to break it. It needs to get above 33 and hold, and then I think it'll break it in the silver market as well. But for gold, I told people last year, once we held that 2,000 and it was obvious that we were starting to short squeeze, that for the most part, you didn't really have to worry about too much manipulation in the gold market anymore. I mean, maybe something here and there, a day here or there, but nothing that was going to take gold down for weeks on end.
No. What broke the cartel here in gold? Like, was there a trigger for it? Like, or did they just give up, disappeared, focus efforts elsewhere? Curious.
Fundamentals will always eventually break any suppression of a market. You can't hold the suppression against nature forever. And this time it happened in gold. It happened when they tried multiple times to drive gold back below 2,000, and they failed. And then at some point they had to start covering into that rally. And like I said, that's what triggered that 800-point short squeeze.
Gotcha. It's like we're seeing a bit of a bear squeeze happening right now as well, with gold being transferred to the COMEX, a lot of short contracts being closed as well. Can you comment on that? Like, how does that fit into your model and into the, let's say, gold narrative?
Well, as we discussed before we started talking, I don't get too bogged down in that fundamental stuff. I just follow my cycles, and it just seems like it always manages to play out that when it's time for a cycle to rally or a cycle to top and get a correction, some some quote unquote fundamental reason will pop up for it to do it. And this seems to be the excuse that everybody wants to use for why gold is rallying as strongly as it is. But I think the biggest, the fundamentals have been in place for years, but I think the biggest driver is just, the cartel failed to drive gold back below 2,000, and now they're caught in a short squeeze, and they're, and it's just getting worse and worse for them. But like I said, we will have, I think, a pretty severe correction here later this spring, just simply because we're getting stretched a little bit too far above, let's say, the 200-week moving average. And when that happens, at some point you get a regression event and a severe profit-taking event. We'll have one of those this spring.
Let's take a look at the charts, Gary, because you haven't managed to fully calm my nerves yet, especially when you're talking about a severe correction. Let me add that to the screen here. But, paint a picture for us. Like, where are we at right now with the gold price? Where do you see things trend now?
Okay, so maybe be best if I go to the weekly charts and expand this quite a bit so you can kind of see the big picture to start with. All right, so here's the main driver. We've got this 13-year cup handle breakout. Here was an 8-year cycle low in 2008. Here was the next one at the end of 2015. Here was our 8-year cycle low back in 22. And you can see we're still very early in this 8-year cycle. We're only, a little over, 2 years and 4 or 5 months into this. And as I said, I don't think I've ever seen an 8-year cycle that tops before you get to 4 years. And so, at the very least, we've got, at least 2 more years for this to rally. And then you've got this, very aggressive rally out of this handle breakout. And I think it all started back here in what is this? Beginning of end of 23, beginning of 24. You can just see there was multiple attempts to try and drive gold back below 2,000, and then when it broke, the short squeeze started, and this is where that aggressive rally began. And then instead of getting our normal, most of the time an intermediate cycle will unfold as an ABC move. But that didn't happen. The short squeeze was still in control. And so instead of a normal deep ABC move back down, we get a sideways churn. So that's what happened here. And actually, it happened here as well. This was an intermediate cycle low, but it was just a sideways churn where they failed to drive gold back below 2,000. Sideways churn here, and then the last intermediate cycle low. Let me see if I can get, and maybe it'd be better for me to move this back down to the daily chart. But instead of a normal ABC correction, the C wave right here truncated, and it turned into a triangle. And then once we got the breakout from the triangle, again, very aggressive move. I think we're again churning sideways right here before we break through this. It's about 2960 is this resistance zone. This is where they're trying to stop the rally here. They would prefer this not get up to 3,000, and I think it's going to go through 3,000. But they're not going to be able to hold this. There's just too many knocks on the door right here. The more times you knock on the door, the more likely the door is going to open. So they're not going to be able to hold this at 26 or 2960, and it's going to break through this. This is, in my opinion, this is probably what's going to qualify as a minor daily cycle low. So this was an intermediate cycle low. This is took multiple weeks to play out. This was also an intermediate cycle low. Even though it didn't form as an ABC pattern, it just formed as a sideways churn. But even during a rally when you're in the advancing phase of an intermediate cycle, you still have minor corrections. These are daily cycle lows, and that's what you had here, and then this was a daily cycle low, but kind of a sideways churning one. Here was a daily cycle low. I think this is, well, I'm positive this is what's going to count as a daily cycle correction, but it may not correct all that much. It may just be a sideways churn underneath this 2960 zone, and then once it's done, we'll break out. Now in silver and miners, we are actually getting a normal corrective move, but for gold, it's kind of more just going sideways, at least so far anyway.
Let me ask a very, I'm not a technical analyst, Gary, so I hope it's not a naive question here, but looking at this chart, do you see any gaps that need filling? I often hear chart commentators like, oh, well, we gapped up too much here. It's healthy to backfill that gap, meaning the green candle was too big or jumped up too high. Is there any gap in the chart that needs backfilling that we need to worry about at further down levels?
Well, this is a futures chart, so it trades 23 hours a day. So there's not going to be much gaps on the futures chart. There's a little one right here. Sometimes you can get a gap from the close on Friday to the open on Monday or Sunday night or whatever. I don't think this is going to fill realistically, though. We're in the advancing phase of a new 8-year cycle. So we really shouldn't be going back down to test the prior intermediate cycle low. So in this case, this would be our last intermediate cycle low. Here's another one, and you can see when we get these intermediate degree multi-week corrections, they make higher lows. They don't go down and retest or even really get very close to the previous intermediate cycle low. Pretty sure same things are going to happen when we get our next intermediate degree correction. It will hold well above this intermediate cycle low right here. I do think it's going to be severe, so we might come back down to test this pivot. But I think we've probably got a date with, I'm positive we got a date with 3,000, and I'm pretty sure we're going to get to maybe 3,200. Maybe we might even go higher than that, but I feel fairly confident in saying we're going to get to probably somewhere in the neighborhood of 3,200. And then at that point, now you don't have to take profits on your long-term positions like your physical. I wouldn't run out and sell my physical gold and silver, but on your trading accounts, somewhere in there, you're going to have to control greed and take profits, and then just be patient and wait. These intermediate degree corrections run anywhere from 6 to 12 weeks. So you'll have 2 or 3 months of sitting around twiddling your thumbs, waiting for that correction to run its course. And then when it gets really scary and everybody, that was, up here at 3,200, everybody that was talking about blue skies, ahead and gold is never going to correct, and the fundamentals will prevent gold from ever going back down. Those same people will be extremely negative, and they'll, gold is terrible. I'm never going to invest in gold again. I'll never buy miners. They're worthless stocks. And that's the sentiment you want to see. And that means that you've just about run out of sellers, and it's time to get back in again for the next leg up.
I love those comments. When was the last time gold has done anything for me? Gold doesn't do anything for you.
When you start to see that on X and people are making those kind of comments, especially, the ones that were, 2 months ago were telling you that gold could only go up and there was no possible way that gold could ever go back down because the fundamentals had changed or whatever. Then when you see those people starting to get bearish, well, then you know that you're just about to run out of sellers, and it's about time to start buying again.
Yeah, no, absolutely. Gary's looking at the chart purely, in terms of other indicators did you take into consideration when you look at that chart? Do you look at volumes or anything else to help you define potential cycle tops, or when there's a massive return of a volume into the chart, what does that tell you?
Well, there are multiple things that I look for to help me try and spot tops and bottoms, and I don't really want to go into too many of those because that's kind of the information that I give my subscribers so that they can learn how to spot these things for themselves. But volume is one thing that I look at. I look at, to some extent, how far price is stretched above the mean, and then what sentiment levels are at, and then where we're at in the cycle counts, intermediate and daily cycle counts.
No, gotcha. I appreciate that. I don't want you to give away the secret sauce here, obviously, Gary. But looking at gold and looking at your chart, like, how do you react to external shocks? Meaning, like, what happens if inflation reports much higher? What happens if the dollar jumps to 110 in the Dixie, for example, or geopolitical events? Like, how do you sort of keep a level head here, like looking at the chart? Like, how do you ignore that?
So there's no way to predict a true black swan. So there's just no tool that's going to do that for you. The minor things like inflation, what is CPI and PPI and those kind of things, they just always seem to kind of pop up when it's time for. Like, I can almost always find some kind of a quote unquote fundamental reason for why gold drop down into a daily cycle low, or why an intermediate cycle has topped or bottomed. A potential trigger event next month in March might be the FOMC meeting about halfway through March. That might be a spot where we could maybe form a daily cycle top or a daily cycle bottom, although I don't think a bottom is realistic, since we're already kind of moving either sideways into a DCL or a daily cycle low, or dropping into a daily cycle low. That would be too far out. This daily cycle is already really mature. I think we're on it's like day 43 to 45, somewhere in there. So we're in the timing band right now for a daily cycle bottom. So to push this out to the mid-March would just be too long. The cycle would be too long, so I don't think that's likely. Now we could, if gold was to bottom here pretty quick, break through this resistance at 2960, and then slice through 3,000, and let's say we're at 3,200 by the FOMC meeting, then at that point I would be looking at the FOMC meeting as a potential trigger event to start an intermediate degree decline. So that's another tool you can look at to try and help spot these tops and bottoms. Is not always, but a lot of times there's a trigger event.
No, March 18th, I believe, is the next Fed, at least a press conference.
So. I think that's right, and that'll be on their decision on rates as well, which I think they'll probably hold steady.
Gary, you touched on silver earlier. You give your price forecast without giving us, the background info. Now I need to quiz you on silver and how it's not been following gold's move up higher. Gold-silver ratio is still around 90, last I checked. What do you make of silver's price moves lately?
So as I said, I don't think silver and the miners have broken the cartel suppression yet. It's clear as daylight right here at about 30, let's just call it $33. Almost tested it here, tested it there, rejected, tested there, rejected, finally broke through here, but it was kind of late in this intermediate cycle. The rule is breakouts that occur late in the cycle don't usually produce sustained moves. So, immediately slammed it right back down with these big, attacks on silver. Gets back up, tests it again, huge attack the next day. Unlikely that's natural in my opinion. And then now just test after test after test. And then when we finally get above it, was this Friday before last, I think, just a huge attack to try and stop that breakout, get above it again, more attacks to stop it from that breakout. So in my opinion, this 33 level in silver is like that 2000 level in gold. This is where the battle is being fought for control of the silver market. When they fail to hold the suppression at 33, then I think we'll start the short squeeze in silver. And you know, bull markets make higher highs. That's the definition of a bull market. So this is an intermediate rally. It's got to get above this. It's got to make a higher high. The next resistance zone is, I think, between 37 and 38. So I think that's, pretty much in the bag. And if we do break the suppression on a breakout above 33, then and do start a short squeeze, then I think we could go through that 37, 38 resistance and get to $40 during this intermediate rally. And it might be a long shot, but maybe we could even get to 45 if the short squeeze becomes really aggressive. I don't put high odds at that. I put great odds at 37, 38, pretty good odds at 40, kind of a long shot at 45.
Yeah, it's like I'm trying to get a bit theoretical here as well. Like, why has silver not been able to keep up with gold? Like, I'm really trying to understand that. Is it really just because of changed fundamentals? Like, silver is less so of a monetary metal these days than an industrial metal like gold. Is that the main reason? Like, I'm just trying to understand it here.
I think it has nothing at all to do with fundamentals. I just think it's just all of these attacks at 33 trying to stop the rally. They've got huge short positions in silver that are, who knows how many billions they lost in gold when they couldn't hold that suppression and they got caught in that 800-point short squeeze. How many billions are they going to lose in silver if they can't hold this suppression as well? So, in my opinion, it has nothing to do with fundamentals. It's just that there's billions of dollars at risk on the short side here, and they are pulling out. They're fighting tooth and nail to try and keep this from breaking out above this 33 line in the sand. In my opinion, once it does break out, then I think silver will catch up pretty quick. As you said, at 90-to-1 ratio, that's just silver just way too cheap, and most intermediate cycles in the metals will top with the gold silver ratio coming back down to at least 80 or below. So at 90-to-1, this doesn't look like any kind of an intermediate top I've ever seen. Not at 90-to-1. Now, if we were at 75-to-1, then I'd say, yeah, we're either at or really close to a top. And if you've got trading positions on, you need to be controlling greed and taking some profits. But at 90-to-1, I'm not at all nervous that we're near an intermediate top.
You said silver is too cheap. What if I flip it around and say gold is too expensive? What do you say?
Well, how many? Well, what is the deficit on the U.S. debt? How much money has been printed? I think that gold is probably even still at $3,000 compared to all the money printing that has gone on. I think gold is probably insanely cheap at $3,000 an ounce. I would say fair value might be something around $10,000 an ounce. So I would have to disagree with you. In my opinion, gold is not too expensive.
No, I was just trying to poke the bear and see what comes out, quite honestly. Yeah. So, just trying to understand it. Like I told you earlier, like I'm looking at that chart move, and of course, and what we're seeing from retail here in Germany or in Europe, and the World Gold Council gold reports are confirmed that is that the Germans and the Europeans are selling gold because in euro-denominated terms, like gold is also trading at all-time highs, even higher than US dollars, and people are just cashing in right now because during COVID they might have bought some bullion as a backup. Now they're selling it and cashing in on the profit. Right, that's I think what we're seeing.
Now I will say this: the euro looks like it has formed at least an intermediate bottom, and there's a small chance that it might be a 3-year cycle bottom. In that case, the euro is going to appreciate and maybe you do want to sell some of your gold because your euro is going to go up for, even in a secular bear market, these 3-year cycle lows will usually rally at least a year to a year and a half before they roll over and start back down again. So priced in euros, gold may start to stagnate for a while.
Oh, yeah, makes sense. Like if we actually figure out our politics here and start to grow a backbone or spine, then things could change a little bit. So on that front, Gary, you've been touching on the miners. Like and that's where I come in. Like that's our background is the junior mining and mining space, of course. Explain your position that the cartel is also manipulating the mining stocks. Like I get like let's get a little bit more granular here. I'm curious what your thoughts are and what are the miners going to do and when are they finally going to move? How much free cash flow do they need to show?
So I tend to think maybe the mining stocks might break the suppression. I think for the most part, a lot of the suppression has been focused on the miners. They've paid billions in fines for suppressing gold and silver, and there are rules on how many contracts you can trade short in the futures market in gold and silver. Whereas you can short miners willy nilly all you want. But here was our previous. This was the previous intermediate cycle top. Gold was at $2,800 here. This is where the mining ETF GTX, and I only trade ETFs. I don't try and pick individual stocks. But this is where GDX topped with gold at $2,800. Well, gold is now $40, or it was $40 away from 3,000, and the mining stocks couldn't even make higher highs. Explain to me how the fundamentals have changed so much in 3 or 4 months that mining stocks can't follow gold to new highs, and especially since oil is in a bear market, so they're at least their energy expense is going down. So I don't see any reasonable explanation other than they're just getting they're just being shorted into oblivion to try and keep the metal space contained to some extent. But I think this will break as well. But I'm not so positive that it's going to break during this intermediate cycle. Although I do think GDX will eventually make a higher high, but it may not make a proportionally higher high if gold is at 3,200. I mean, realistically, GDX should probably go to 50 or 55 at that kind of gold price, but I doubt that it will. So I think it might be maybe in the fall before we really start to get some significant outperformance in the mining stocks. So I'm still a bit hesitant, and I'm not all that keen to trade mining stocks aggressively right now. I prefer to be maybe 50-50 GLD and SLV on the trading. Again, the physical gold and silver, you just hold that. You don't, these intermediate corrections don't bother me at all. I never even remotely consider trying to sell my physical gold and silver during intermediate corrections. I'll sell my gold and silver when gold is at $8,000-9,000 an ounce, and my next door neighbor is bragging to me how much money he made on his silver coins that day. That's when I'll sell my physical gold and silver. But for the miners, while I do think there's upside potential here, I'm probably not going to get real aggressive in the mining sector until we get our next big intermediate correction, which, like I said, I think is going to be severe. I think they'll beat the crap out of the miners during that correction, and then that's where I probably want to get really aggressive long for the mining stocks, and that'll probably be, I don't know, maybe May, June, might even be early July. And again, everybody will be negative. They'll be saying gold is done, the bull market's done, it's never going back up again. And that's where I think you want to start buying mining stocks, buying them aggressively.
Yeah, we have PDAC coming up this weekend, and I'm not sure if you're aware of the PDAC curse. It's famous amongst the mining community because whenever that conference happens, stocks dip afterwards. Like the charts all just trend down afterwards. Might be seasonality.
I don't know if it's going to do it this year because we're already dipping. This is already a daily cycle low, and it may have bottomed yesterday. And if that's the case, then once we do start a new daily cycle, it's not going to top quickly. It'll make a higher high, probably come up and test this, maybe break out above it. So I would look for that curse not to work this year. It's probably happening prematurely right now.
Gary, you're my new favorite guest. I'll have to bring you on more often because I was going to PDAC or fly to Toronto with a bit of a sober mood here, quite honestly. Because after the correction, what we've seen yesterday in particular, in the stocks. Like my whole portfolio was blood red. Like, it was just disgusting to look at yesterday. So I just turned it off at 2 hours before the market closed because I didn't care. Right? Just really brutal. Gary, like, what are some of the closing thoughts like there you have for our audience, like that we can send them away with here, like for the next 2-3 months, maybe short-term focus? Like, how should they behave? Like, what should they be looking forward to? Should they be excited, positive, neutral? Like, if you were an analyst, buy, hold, sell, Gary.
So for the typical retail type trader, I think the main thing you want to take away is stay focused on the big picture, and that's that multi-year chart I showed you with the breakout from that 13-year cup and handle, only a little over 2 years into a new 8-year cycle. And then remember, bull markets make higher highs and higher lows. So we're going to continue to do that until we get the top, and the top is still 4 years away. So corrections, whether they be a minor correction like what we're getting now, this is a minor daily cycle correction. This is a major intermediate cycle correction. I think you've got, I would say, at least 4 to 5 more weeks, and maybe as many as 8 more weeks before we get the next intermediate top like this, and then have one of these things. So right now is probably a pretty good time to buy. I'm not completely convinced yet that this is the daily cycle bottom, but it's definitely a lot cheaper than it was up here. And if you don't have to time it perfectly, because the bull market is going to make higher highs. So let's say you buy here today, and then we have to come back down and we go a little bit lower. You don't have to panic and sell down here, because the cycle is going to bottom, and then we're going to come up and make higher highs. And so your trade, while it wasn't timed perfect, is going to be a winning trade. And then just kind of pay attention to sentiment when you start to see, everybody getting bullish and people talking about, no way that gold can go back down. The fundamentals have changed. Then we're getting pretty close to an intermediate top, something like this, where at that point you might need to start taking some profits and controlling greed on your trades. And then you get on the sidelines for a month or two and wait until you see everybody negative again, and then it'll be time to buy again. And usually, like I said, most of the time these intermediate declines will form as a wave down, a B wave bounce, and then a C wave that makes a lower low. So if you're trying to buy into the first bounce, more often than not you're a little premature. You need to wait for a lower low, a break of that initial bounce pivot.
Gotcha. No, very, very insightful, Gary. I really appreciate your insights here. Where can we send our audience? Where can we find more of your work, Gary?
I'm on X at Gary Savage 1. You can find my premium newsletter. I mean, you can just Google Smart Money Tracker and you'll get there. Now, I will say I'm going to be closing the SMT to new subscribers at the end of March for the duration of the bull market. At that point, just loyal SMT subscribers that have been with me will, I'll do the SMT for those people until we get to the final bubble top in 2 or 3 or 4 years. So, if you want to join the SMT, you got about a month here to do it. And after that, it's just going to be, it'll just be basically just be a closed fund only for people that have been with me.
No, fantastic. Gary, wonderful. Thank you so much for joining us here. I really appreciate your time. We'll have to catch up, a little further down into the cycle. Maybe in 6 months' time, we'll have to, take a look at how things have played out, how the game plan has worked out here, and where we're sitting, and whether the cartel and silver has been broken. I can't wait for that day, because, it's going to be, I don't know, what's the right adjective? Like, euphoric.
I'll be ecstatic.
Yeah, something like that. Euphoric.
I loved watching the banks lose billions upon billions upon billions on that short squeeze to 2,800. I'm going to love it just as much in silver.
Absolutely. It's going to be even more violent.
I think it will, because silver is a thinner market, so it tends to move more aggressively.
Absolutely. Gary, thank you so much for your time. Everybody else, thank you so much for tuning in. I hope you enjoyed this conversation here with Gary Savage. If you did, please leave a like, leave a comment down below. And of course, if you haven't done so, hit that subscribe button. It's free to hit. Doesn't cost you anything. You won't see anything on your credit card statements at the end of the month. It's a free way to support us, and we tremendously appreciate it. Let us know what you think. Where's gold headed? Where's silver headed? And do you own some miners? Let us know. We want to hear from you, and we'll be back with lots more here on Soar Financially. Thank you so much for joining us.